units that we have to build, even if they're not sold, but we have to build them in order to satisfy the customers. Now, our plan for the future is to control the growth. We have a research and development department that is at work. Okay, we're still studying new projects in the midst of the crisis. Now we're at the end of the crisis, so we have new prospects coming, new projects are being studied. But we will not venture into this until the market clears. This is the way to cut costs and to manage the cash flow. Cash flow is a key issue right now. We're not looking at present at profitability as much as we're looking at cash flow. Okay, we need to manage our cash flow. We have lots of offers to venture into a new project that sound to be very profitable, but we're not doing that because of the cash flow management issue. As you know, interest rates are very high these days, and prohibitively high. They limit
Is he
expansion.
lending to you?
Yes, he is our biggest lender.
Good.
Okay. No, we're proud to be their customer. You know, probably one of their biggest customers. But we're trying to limit our lending to the maximum so that we can fulfill our commitment at the end. And we're also injecting new equities in order to make up for the lost revenue from sales, etc.
And reduce your cost of capital.
Of course, I mentioned this, cost control is very important.
Absolutely. So it's very interesting because very different businesses, very human resource based, so you can pick yourself up, you can start selling insurance products, mutual fund products, and so on and so forth. In your case, I guess the best thing you can do is halt all new projects and cut costs. But I guess with the commitment that MR comes in with, you will deliver on the existing projects. And
we are delivering, yes.
That's even if people may not have paid. But Waqar Malik Saab, you don't have that luxury. You're a very, very capital intensive business. You can't get up tomorrow morning and say, all right, let's not do soda ash, let's do something else. And your capital footprint, in terms of the industrial setup is so large, you can't even afford to shut down and say we're not going to do anything new. So if you want to start new business lines, you need to inject a lot of capital because it's very capital intensive. So how does a giant like ICI navigate out of this?
Just to, before I answer specifically, Junaid, this, I think one of the things that I wish to add when you are navigating a downturn, what is extremely important for any corporation is that you have a situation when the fear factor comes into the organization, because people are not certain what would happen with the downturn, particularly the people. And I think for any success, what is extremely important is that you have a leadership which is able to communicate with clarity and with coherence, not to set the panic button, but to give a very clear direction and path for the goals to be set. That's extremely important to my mind. Along with that, if you want the success to happen, you need to have, alongside with that, a very, very strong communication channel with your people so that you are seen fair and you are seen as transparent. Now, let me come back to what you had asked me. And I would go back to what I said, that three things matters most. One is customers, the other one is cash, and the other one is costs. Now, the first thing we emphasized in our businesses was that since people become sensitive, what is very important is to get very, very close to your customers and to be able to understand and get under the skin and ascertain what is it that they are wanting, because needs change, as you just heard. And I can tell you, even though we are a commodity company, in certain cases, we were able to adapt and change. For example, in our polyester business, because some customers wanted to downtrade the product for a lower value. And we did reinvent, and we were able to not only reduce our waste, but we were able to innovate and produce a product which the customer wanted. And we increased our market share rather than decreased our market share. So here is an example. Second thing which we did in our two large businesses, which is again soda and in polyester, we looked internally and we said, is there any way we can reduce our cost of manufacture? And the low-hanging fruit was really energy. And we almost generated 5% of our bottom line, company's bottom line, out of reduction in the usage of energy. Again, there was innovation going on there. The third thing which we did was we relooked at our supply chain and said, how can we procure in a better way which can result in better netbacks from our customers in the end. And that's the third thing which we did. On the cost side, I personally do not believe this one-size-fits-all, that just because it's a mantra, you just cut costs. We have actually invested in good areas. And what I mean by good areas is really people. We have not cut back on training. We have not cut back on development. We have rather invested. And with that, we relooked at our organizations, and we also reject where necessary and put our best people where they were needed. So this is extremely important, that you don't panic. You hold your nerve and you put your best resource where it's required. That's very important.
So in a way, it's been a blessing in disguise, because you were able to go back and create efficiencies in areas where if the recession had not come, you may not have looked hard enough.
Absolutely, it's an opportunity, and I can tell you there is one segment of our company which is in recession, is either a defensive stock, is pharmaceuticals, and the other one which everybody mentioned was agriculture, which is a growth sector. There we grew in double digits, and we were able to introduce a new venture which is hybrid seeds, and it is going to be our next line of great earner in our portfolio. So it depends. It is, whilst it's a crisis, it's also an opportunity for everybody. It depends how you want to look at things.
Jamal Mustafa Saab, now you had said that you shared something very interesting. You said that rural incomes are going up and urban incomes, or rather urban costs are going up as well, where at the same time urban incomes are not going up. And as The Economist put it in one of its issues a couple of months ago, gone are the days of cheap food. That means all your essential agriculture commodities are going to keep increasing in prices because of all the factors that we already know. So learning from this experience, is there a strategic shift in terms of, because within urban centers, there are two parts to the question. Within urban centers, the smaller grocers are probably at a higher risk than you are, because their costs are going up as well. The unit cost of the produce that they sell is going up, and the actual real income of the consumers is going down. So is there an opportunity within urban centers for you to expand more? And secondly, from a strategic perspective, because we do see rural incomes increasing over the next couple of decades, probably forever, will there be a shift in developing your outlets in the rural areas as well?
Okay, I'll start with the urban customer first. The retailer, is one of the most important segments in our hierarchy, although